Hey, what's up, everyone? As you can see, I'm in a different setting today, and this is not one of my official videos. But I decided to post this today to just give you my take on all the different kinds of speculations that are happening out there in the real estate market and the mortgage industry. All kinds of rumors that are going around and the topics that are being discussed. Now, I don't know if what I'm going to tell you is really going to happen or not, hence the word rumors. But if it does, how is it going to impact us? That is why I decided to do this impromptu video in my den without my cameraman, just giving you my take on what's going on. So before I proceed, first, I want to thank you so much for tuning in. And if you are new, welcome to my channel, where we try to cover topics that are of interest to you on real estate and mortgages. So please make sure to like, share, tap that bell icon so you get notified anytime I share an informative video. And of course, if you find this information provided is of value, then I would humbly request you to hit the subscription button to get me motivated to keep you up to date with everything real estate. Now, let me see. Let's just, let's start with the story, okay? I'm going to tell you a story because I got a call from a very good friend of mine around 3 or 4 weeks ago, when the market was super hot, and she bought a property a long time ago, and she's sitting on some pretty good equity. And I got a call from her, and she wants to sell her home because she can get $200,000 over market value. And I'm like, maybe you mean over asking? And she said no. She was adamant that it's $200,000 over market value. So we met for coffee, and she started telling me how this agent knocked on her door and told her that the house was sold for, 5 doors down. It went for $200,000 over market value, blah, blah. Long story short, and after some vehement discussions, she realized it was actually over asking. Now, what surprised me is that an intelligent woman like her fell for that marketing ploy. And it got me thinking how it was really not fair to buyers that every house they went to see was listed $200,000 less than what the market value of that property was, leaving the buyers and the buyer's agent to bid for that home. We had reached a point where it was getting difficult even for the agents to give a client the purchase price. And finally, houses were being bought and overpaid for purely out of frustration and emotions. There was no logic to the purchase price. But today, we are seeing a shift. From the time the rate of interests have gone up, the market has slowed down, or in other words, cooled down. But, my friends, do not mistake this as a crash. The market is not crashing. There is no bubble that's bursting. Yes, there is a shift in the market. Houses are staying on the market longer. The fantasy land that most sellers are still in, actually. Those 4 days showings and 22 offers to pick and choose from. Well, that's dying a slow death. Houses are staying on the market a little longer than what we are used to seeing. Conditional clauses are slowly creeping their way into the contracts. Real estate life as we knew it is coming back. Now, that being said, is the bidding war scenario completely dead? No, it's not. The selling agents will always try that route. Not all of them, but most of them will. And for smaller properties, it might still work. But these speculations going around that the market will crash and buyers waiting for that to happen, I highly doubt that. And with all these articles and WhatsApp forwards that are just circling around, it can be very confusing to the layman. So if you are in the market to buy a home, be it as an investment property or your own home, just go buy it. Hold on to that property for 5 years and you will automatically see the growth in equity. So that should not be a concern. Then what should be the concern? It's the possible changes coming in the mortgage section. people are so focused on the bubble bursting or the market crashing that they're not looking over their shoulder to see what changes are coming in the mortgage industry. And that is what I wanted to discuss today. Some rules that are potentially going to change, but like I said, these are rumors. So don't shoot me, okay, if none of these really happen. But because it's out there and because I have attended webinars where people have spoken about this stuff and people within the industry are talking about it already. I'm getting calls every day about these potential changes that are coming. And, you know, when there is so much chitter chatter going on about something, it's going to happen. Like winter is coming. Game of Thrones? No? Bad joke? Okay. All right, I'll get serious then. I'll get right to the topic. There are 4 potential changes. Rumors, floating around. Now, as you are aware, for more or less, I think around the past 2 years, buyers have been screaming bloody blue murder about the prices. The fact that they cannot afford these homes anymore because foreign investors are swooping right in and buying up properties like crazy at prices that are unfathomable. Even though that's not 100% true. But finally, the banks are like, okay, calm down, we heard you, and this is what we're going to do for you. 1, they are talking about making down payment for investment properties a minimum of 30 to 35% as compared to 20% requirement as of today. That's a 20% requirement is today. They're going to make it 30 to 35 in the future. Second, and this is the killer, they are talking about not allowing you to use your home equity line of credit as a down payment when buying an investment property. Now take a second for that to sink in. 35% down payment, but you cannot touch your HELOC. If this rule gets passed, do you really think it will impact foreign investors? No, it won't. Because they normally never need a mortgage. And even if they do, they have to put down 30% anyways. So this rule is not going to curb foreign investors. It's going to put shackles around the local investors' ankle. And yes, government officials say that province plans to boost its non-resident speculation tax to 20% from 15%, while also applying the tax province-wide, not just for the Golden Horseshoe area. But that's coming into the effect at the end of March, after most of the damage is already done. Then comes our beloved CMHC and the changes happening for those buyers who don't have the 20% down. Those unsuspecting little first-time home buyers and people buying their principal homes. Now, CMHC so generously has planned on increasing their threshold from 1 million to 1.25 million. High time, right? Yeah. Second point, they're talking about increasing the amortization schedule from 25 years to 30 years. That will help with their potential purchasing power. Even though this is a positive for first-time home buyers, my fear is the premium that they're going to charge you. Already, if you only have 5% down, they take away 4% as the premium. So technically, you have only put down 1% as the down payment. So this section of the change, we just have to wait and watch. Now, last week I was attending the webinar, like I said, and there was a lot of talk and everyone was talking about these rules coming in and how it will affect for the first-time home buyers, blah, blah, blah. And the rules are not even out yet, just so you know. The banks are focusing on the increase of the interest rates right now and I was quiet till the moderator pulled me out and asked me what my take was, and because I've been zipped the whole time. And I said, I just have 2 points. The government, the bank, the mortgage default companies, they constantly claim to protect first-time home buyers, to make things easy and affordable for them. But all their policies negate everything they say. So here's my 2 cents on helping first-time home buyers. And tell me if I'm right or wrong. I don't know, but give me your take on it. One, give them the 30-year amortization. Make it a bit easy for them to purchase a home. The one they want. Make the payments that are more affordable for them. Two, take away the stress test under the condition that they go 5-year fixed and lock them into the mortgage for 5 years. They can't go anywhere, but take away the stress test and see how their purchasing power will increase, and they can actually compete with others. If they want a variable mortgage or if they want a shorter term, yes, by all means, the stress test will apply, but give them the choice. Don't put a noose around their neck and then pretend to protect them. So that's my take on the potential changes coming in. And tell me, what do you think? So I'm signing off, and I really hope this information was useful. And yes, don't forget, subscribe, like, share all these videos. See you next week. Bye.